This morning in the live stream, there was a great trade setup using a classic chart pattern along with volume profile and Bookmap. You can see right here where I entered the market. I scaled out. Now, unfortunately, I did not get out exactly where I should have got out of the trade. So let's go ahead and look at what I was looking at this morning. And for that, we're going to start off looking at the volume profile chart on the 30-minute chart. Now, when I came on to the live stream this morning, it was somewhere over in this area right up in here, right around 8 o'clock this morning. And what do you guys see on the chart? Well, at first glance, I see a potential double bottom number one, bottom number two. And what I really liked about this bottom was the fact that this candle right here went lower than this area right over here. And then we closed way back above that level. Now the pattern was validated once these swing points right up here was broken. Now, what I went ahead and did is I want to go ahead and measure where that target completion would be at. And notice we have that double bottom pattern completing at 67.98. Now, then notice as we look to the left, it's right above the high from the prior day. Now, if you guys listen to my analysis video on the main channel, I talked about this in this video that we had an inside day. Notice the low was higher than the prior day's low. The high was also lower than the prior day's high, which meant we had an inside day. Now, what normally occurs after an inside day? I warn about this all the time. Quite often, the first move is a trap. So whichever way we first break, quite often ends up being a trap. And look what we did this morning. Not only did we complete the double bottom target, but we also broke out above that high and actually ran up to make a new all-time high in this market. Now, something I didn't do too good when I entered the trade. One, I wasn't looking for any particular entry point. Instead, I was looking for a bigger theme in the market, looking for a move down. Since I started this position with a micro trade, I was looking to DCA into it with the hopes of getting anywhere from 6 to possibly 10 contracts on this to kind of be able to scale this out with multiple points on the way down. So as we look at this, there's a couple things that we could have looked at for potential targets. For one, notice as we broke above value area high, once we come back down below it, I talk about all the time, we can use the point of control as target number one, and then value area low, and then even down here towards the candle bodies or even candle wicks from the prior day. However, this morning on the live stream, as I was looking at Bookmap, something I noticed when I had this scrunched down here a bit, notice what we have right here. We have horizontal lines going across the screen. I have one at 67.60 and the next one right around 67.50. Now these are resting limit orders. And you can see right here at 8 something in the morning, we had over 293 contracts sitting there at 67.60. Then down here at 67.50, we had 300 contracts resting there. Now, something I really liked about this level was I remembered that yesterday we also had liquidity at those levels. However, yesterday we didn't have quite as many contracts sitting down there. So for me, I was already thinking before I even put the trade on, how can I go ahead and get involved for the entire move on the way down? And that's really where this double bottom completion came into play. Knowing that the market was extremely strong, we're probably going to see gaps in the equity markets. We're likely going to see gaps. And then the real target I should have targeted should have been down here at 60. Notice we did not go much below 67.50 today. The low of the day, I believe, was down here about 67.47 and a quarter. Now, something else that we do want to look out for after this has occurred, we want to look at, is there potential further downside pressure in the market? Well, something I talk about all the time on the live stream is I love to come over and look at the ATRs, the average range in these markets. Now, if you look at this column right here for the S&P 500, it has an average range of 54.5 points. Notice the entire range today was 55.5 points. So that means when the market came down, put this low in, we have already hit the average range. Now, it doesn't mean we can't expand the range, but as we look at this, where would the next trade come into play? Looking at the volume profile. If you guys have watched a lot of my analysis videos, you guys probably already know that my eyes naturally gravitated right up towards this minus development area. We can look at it on the profile along with a potential structure breakdown point. Then something else that we'd also want to do is grab our Fibonacci retracement tool, measure from the high all the way down to the low, and look at where the 50% level comes in. It comes in right at the upper end of that minus development area. And as I'm recording this video, notice we are already starting to get within that minus development area of the profile. Now the question is, will we stop at the 50 or even 61.8 Fibonacci level and then potentially turn down, setting another ABC pattern to the downside? So let me know in the comment section down below. Do you think the market is going to reject from this area and go back down? Or looking at this chart, do you guys think the market's going to continue to go higher?